All right, Dan. Hello. What are your thoughts on trading market index ETFs, SPY, DIA, QQQ, using the RPM strategies rather than specific symbols? Pros and cons, Dan. And I believe I have a webinar on that I'll try to find for you that's more in depth than what I'm going to cover here. What are the pros of doing a married put on, say, SPY, QQQ, NDX, or even IWM? Well, you have the benefit of slower movement. You generally have the benefit of lower volatility. Okay, so here's SPY at 282.97. And let's go back in time. Let's go back to 5 months ago, 4 months ago, before all of the volatility, and we know the reason why, and everything else. Back here in January and February and December, when the market was just chugging along, and we were at our 338 high, or 330. With the market going good, Dan, if I bought this stock, SPY, at 334 or 335, let's say, and I bought a 340 put 6 months out in time, the volatility was probably around 0.15, 0.12, very low volatility, which means what? I could get almost a year out put, just a couple strikes in the money, and probably only have a 4 or 5% risk. We'll take a look at that in just one moment. Okay. Now, at the same time, markets are going up and down. I don't know one, maybe Shopify. I'll take an example. Shopify might have been around the same price. It might have been in the 400 range. But see, at the same time, Shopify buying, let's say, if it was at the same price and I bought it at 335, but it had a volatility of 0.45 or 0.5, well, I might have to go 3 strikes or 4 strikes in the money 6 months out to get a 5% risk. So if I only go 1 or 2 strikes, I'm going to be looking at an 8 or 9% risk. And the reason behind that is that with the stocks, the standard stock positions, you expect in a general market, things like the fast movers that come up on our search, Dan, you expect more movement upwards, where usually I'm targeting a 3 to 6% move upwards in 20 to 40 days, i.e. the Kraft Heinz position, not the one that was up 26%, which was our fake position from earlier, but the real position I'm in that's up 7%, and I've been in it since April 8th, so we haven't even been in it for 20 days yet, okay? But with SPY, you think a normal monthly movement is probably only around 2%. So you get a lower risk because of the lower volatility in normal market conditions, Dan, but you also expect less movement, which means you're going to be in the position longer, and you might have to wait longer to apply the appropriate income methods. Okay? Give and take. What do the stocks have? The stocks have more wild movement in general. Everything's a wild mover now. But the stocks that we're talking about, Dan, for the radioactive trading technique, the RPM technique, tend to move more quickly, both up and down, and are a little bit more volatile, but that gives you enriched premium to do the income methods, but you're also taking on a higher risk in that case, Dan, because of the higher volatility as well. Okay, yeah, Shop is at 600 this week, but I know at the beginning of the month when I opened Kraft, I think it had dropped back down. Let's just take a look. We're here. Why not? Let's just take a look at Shop. I know it went up to 600. This stock moves 30 to 40 points a day. It's just been a lot of fun to watch. It's kind of ridiculous how this stock moves. But Shopify here, we used it as an example. Yeah, look at these kind of wild swings. So it was at 350 at the beginning of the month, and it was as low as 300 during the decline. And it was hitting around 400, and back when we were talking about, it was about 450. Okay, so it was 120 points higher than SPY there. But yeah, this stock has just gone up. As you mentioned, nice Bollinger Band breakout there a few days ago, and it's kind of tapered off from that too, but it's been all over the place. Every day I have it on my watch list, and I see it up 60, up 20, down 40, up 30, down 10, up 45. It's a lot of fun to watch. I'm not trading it. I don't have an investment in it, but it's a lot of fun there as well. Okay. All right. Okay. So that's sort of the rough answer, Dan. Now let's take a look here real quick. We'll go back to the married put screen. Let's just go into the basic search. Oh, and so we know now that the market's different. This does have more volatility. But as SPY starts to move back up, we'd be expecting this volatility to start dropping a little. The 50-day volatility is at 0.68, right? And the 20-day volatility is about 30% below that at 0.44. Thanks. That's kind of interesting. But let's go to the Married Put screen. I'm going to go to Search. And do I have IV? Yeah, so most of the stocks that come up on my list now from the RadioActive default search, this is the list I would choose from if I open positions today. JD.com, Qualcomm. Yeah, I skipped right over the pharmaceuticals, even though Sam was talking about how the pharmaceuticals are looking good. Johnson & Johnson's back in the list. Bristol Myers Squibb. Kirkland Gold. That would probably be a good one. I shouldn't make direct advice, but that might be one I might consider next week for a new Married Put position as I adjust them. Yum Brands is an interesting one too. As I mentioned, I'm in Kraft Heinz because I'm expecting strong sales for them over the next couple quarters as more people are going to the grocery stores, of course, and that's one of the reasons I got into them. Okay, but you see here what I was going to show you is that the applied volatility, 20-day or 50-day, but the 50-day volatility, some of these are actually pretty low. Yum Brands, Johnson & Johnson, they still kept in a low range. Nothing's really high with the exception of VIP Shop Holdings and Sienna Corp are pretty high in the 0.5, 0.6 range there. But as we saw, SPY, of course, is at 0.68. But normally during normal market conditions, Dan, when things settle down, that's going to go back to a volatility of around 0.2, 0.15. It's not a bad idea to use the Married Puts on those positions, especially to protect against the unknown where we fear we might be, the uncertainty and volatility we might remain in for maybe the next year, maybe the next 2 years. It's hard to tell as we start to gauge the effects on the economy and more. But with an ETF, they can be profitable. Kurt has had profitable Married Put positions on DIA. I also had one, I think, on QQQ in the past, but they move in general more slowly. In general, mind you. They do show good gains. You know, look at the past 8-9 years at SPY. I said this was a strong gain in SPY. It would have been great for a Married Put position, and you'd probably be right. But it moved more slowly than some of the other stocks. Made it harder to get the premium you want to do the income methods effectively to get that price down as well. Okay.